Buying your first home in Canada, Halifax edition. So buying your first home is very exciting, but let's be honest, it can be nerve-wracking and you may be overwhelmed. You don't know where to start. So hopefully this video will explain everything to you and put your mind at ease and help you navigate the whole process. We're going to talk about savings plans, the products that you can use to help you save for a down payment quicker and better, mortgage approvals, inspections, from start to finish. I'm going to explain everything from pre-approvals to handing you the keys at the end of the entire process. So if you're watching from Halifax or anywhere in Nova Scotia, this is especially relevant to you. There are changes throughout provinces, obviously, and even different parts of Nova Scotia have different fees, de-transfer fees and whatnot, but regulations are all typically the same. So let's jump right into it. Number one is saving for your down payment. Before we get into the fun stuff, shopping for houses and picking out houses, we need to talk about money and qualifying. The best savings tool right now for first-time home buyers is the FHSA, First Home Savings Account. And what this is, it's the Cadillac for savings. So you can contribute up to $8,000 per year for a total of $40,000. It's tax-free. You can pull it out whenever you want. There's no penalties, and the money that grows in there is also tax-free. The other thing it does, it lets you have a tax write-off for your income tax too. So it's kind of a combination of your RRSP and the TFSA, tax-free savings account, but a little bit better product overall. Now, if you don't get $8,000 in 1 year, it carries forward for 1 year. So if I didn't put anything in this year, I could put $16,000 in next year. However, if I go to the third year, I can't put $24,000 in. I got to start with the 2-year roll ahead. So just be cognizant of that. So that's the best product if you're a first-time home buyer, is to open that account and start contributing to that account right away. The second option in borrowing is the RRSP. The reason why this one is still in play is because the first home savings account came in later. So I find a lot of people have more money in their RRSP. Now, that's great. They'll let you take out $60,000, but you do have to pay it back in over a period of time. So a lot of buyers I find right now are doing a combination of both. They've started the first-time home buyer savings account later, and they've worked into a pretty good RRSP, so they're blending both of those to come in. So next is, how much money do we really need? So let's talk down payments. So recently there's been this 2% down payment announcement by the Nova Scotia government. Let's just table that for now. I have a very strong opinion on how that's not in your best interest. So we're just going to go with typical. 5% is kind of your bare minimum. Now, I know a lot of you are really shocked right now because somewhere, somehow, someone told you you needed 20%. That is not true. 5% is the minimum you need to purchase a home here in Nova Scotia. So 5% is pretty low. There are some fees. There's the mortgage insurance fee, and those premiums kind of scale based on how much you're putting down. If you do put down 20%, you negate the home mortgage insurance premiums. So it does save you money there. However, typically with first-time home buyers, they're averaging, on average, somewhere between 5 and 10% is kind of where their savings are putting them to break into the real estate market and home ownership market. So biggest piece of advice there, we get you in touch with a actual mortgage broker, a professional mortgage broker, not a financial planner, not a banker, someone that their actual career is mortgages, and that's their knowledge base. That's who we want you to be talking to. And a few reasons for that. One, we want to get you pre-approved. They want to give you your mortgage options. They want to tell you what you're qualified to buy, and then you can fit that in your budget. You might be qualified to buy more than you're comfortable spending, but at least you know where you're going to be and what that actual cost looks like. So the boring stuff is kind of over. You work on your savings, the products and the machines we can use to save your money, and then who we speak to ensure you're ready to move forward and you're qualified. So now that the boring stuff is done, let's move into the exciting part, looking for a home. So how do you choose the right home for you? Because everyone's different. So I have this theory about fit, feel, and function. So fit, does it fit your lifestyle, your commute, places you visit the most? Because you may be thinking, I'll compromise on my location because I want to spend a little bit less on the home. But when we calculate your commute, the time and the cost of commuting to the places you visit most frequent, work, family, fun, friends, maybe it's costing you more money over a 5-year period than it would if you spent a little bit more money on a house to get you in a better location that fits your lifestyle better. So that's one that we have a conversation with all our buyer clients about right off the start. And then feel. When you walk in the home, does it feel like home? That's the big one. Sounds corny, but there's a lot to feeling. You are going to make emotional decisions and decisions on feeling, and that's why you hire professionals like me, take the emotion and feeling side away and give you the direct talk. You're still going to make a decision mostly based on feeling and emotion, but we're here to guide you on the other aspects of those decision-making process. Now, next, when we're in the home, so fit your life, it feels like home, function. Does it work for how you live and function daily? So I just tell people to think about what they do in the run of a week in their current property. Does this home fit that? Maybe it improves that. Maybe you're someone that I really need an ensuite, or we need 2 bathrooms, or we need more closet space. Those are things you need to consider. And then how you live. Are you looking to entertain people? Are you a homebody? You don't like anyone coming over? Do you need a yard? Do you have children that need a backyard? Do you have pets that maybe need a backyard? All those things come into the play. So the fit, feel, and function are big things when I'm narrowing down a home for people and keeping people on track. So you might be in a home and, wow, it's a great location. Doesn't fit my lifestyle. Doesn't feel like home when I'm in it. So there's just the small things that I try to work with my people to find the right property for them. So after we do this process, now we found the home. Once we find the right home, there's 5 things that are going to matter in an offer, because that's the next step. You have to put in an offer. So number 1 is price. What are we offering? So we would discuss that. We're obviously working within the budget we outlined at the beginning. The second thing we're going to talk about is deposit. Now, here in Halifax, typically the deposit amount is 1% of the offer price. And this 1% is paid up front within kind of a 7-day period typically. And it's held in trust by the seller's real estate brokerage. And it's used towards your closing costs or the purchase of the home, but it is paid up front. So just something to consider, that you want to have that amount of money on hand and accessible right away, either via e-transfer abilities or being able to go to the bank, get a certified check to deliver to the brokerage. The next thing we'll talk about is irrevocable date. That is basically how long we leave our offer open for the sellers to respond to or accept, really accept, because they can accept our offer, they can reject our offer, or they can send us a counteroffer, which would also have an irrevocable date or time on it, saying, here's your offer, here's what we're changing in your offer, a counteroffer, and the timeline we have to discuss that. This is kind of where the negotiations have taken place. We've put an offer together. I've presented it and negotiated to the seller's realtor. They've gone to their people. They've discussed their thing. That agent has come back to me. It's a bit of back and forth there. It sounds like a lot, but typically that's going to happen in less than 24 hours. Those phone calls and conversations do seem to happen fairly quickly. The next thing we're going to talk about is the due diligence period. So we get the offer accepted. Now we have a period of time to do our due diligence. And usually that's anywhere from 7 to 14 days. The longer period of time is typically on homes that have a well and septic system, because there's some testing that has to happen there that takes a little bit longer. Really, the water test can take up to 5 days to get that back. So it's a longer period for our due diligence time. But in that period, we're also completing a home inspection, We're finalizing your financing. We have a lawyer that's going to review the offer and examine the property, make sure there's no liens or anything wrong with it. We're also having an insurability clause in there. That means that you can get home insurance and this property can be insured. You're wondering, why is that a process? Well, unfortunately, some people have done things that make them unqualified to get home insurance. And some homes have things that happen to them or have things with them that insurers will not insure. So those are things that we need to deal with up front. This sounds like an easy one. It gets missed by a lot of realtors and buyers. It is significant, especially if there is an issue with insurance. So it's a step that we want to make sure we take care of. And in that also, that due diligence period, we submit your deposit as well. So great, we worked everything out. We've done our due diligence. We're going through the whole process. We also have to consider your closing costs. So we have your savings for your down payment, but then you have your costs involved in the purchase of a property. So ones that come through the period of time of offering and inspections are your home inspection, a well and septic inspection as well if you are on those systems. And these can be costly. A home inspection can be $800 or more. A septic inspection can be the same. Testing the well and the water test can be another $500 or $600. So in all, you have a lot of fees there in the process. And then at closing, we have one significant fee here in Nova Scotia, Halifax in particular, is the D-transfer tax. It is 1.5% of the purchase price. Now let's do the math on that. If you're buying a home for $500,000, you just put out $7,500 in tax. So you have to account for that. So typically what I tell people to do is you have your down payment here. Now let's add anywhere from 2% to 3% to cover off our closing costs. That's a good cushion to have. Ensure that you're not stressing at the very end to come up with a few $1,000s that we didn't account for at the beginning. So next part of this whole process that we're going to go through is the marketing strategy. Like, how are we picking the home? So the three market factors to help you strategize and negotiate smart are days on market. So I tell home buyers, if a home has just hit the market, seller is pretty confident in that listing price. So the negotiations with the seller at this time here in Halifax in this period of time is going to be very minimal. They're not going to want to move off that. But if we do your neighborhood and we search, this is the area you're looking at, this is what we're looking at, we do a 30-day search on recent sales. Okay, homes sell in typical, say, 30 days. Now let's say the home you're looking at has been on the market for 50 days. That seller already knows that the market has rejected their listing price, and they should be more open to a lower offering price. So those are things to consider when we're putting a price together. Next we study is the sold prices versus the list price. This basically just tells you what most homes are selling for. So the way we work this out is what you asked for the home, what they accepted, and what that difference is. So maybe homes are selling for 99% of their ask price. Maybe they're selling in your area, or what we're particularly looking at, 105%, 5% over asking. Maybe it's 90%. But we do that so you are prepared when you go to the offering table. You kind of know where you're going to need to be, and you're not shocked when I tell you, hey, no, this seller is getting multiple offers, it's going after. Or you're not shocked when I say, listen, we can actually offer 5% lower than the ask price. So we have that discussion up front and we strategize all that out for you. The next thing we look at is months of inventory. And when people say months of inventory, really what we're talking about is, what type of market are we in? Are we in a seller's market? If we are, we just take kind of a trailing period. I try to use 3 months of sales. So how many homes were listed? How many sold? So what's the absorption rate in that 90 days or 3 months period? Now, if that comes under 3 months, then we're in a seller's market. If it's anywhere from 4 to 6 months, then we're in a balanced market. If it's over 6 months, we're in a buyer's market. We haven't been in a buyer's market for a very long time here in Halifax. And right now, for Halifax as a whole, We are in a seller's market with just over 2 months of inventory. But again, there's micro markets within the wider spectrum of HRM. So I would always dial into what's West Bedford doing? What is Hammonds Plains doing? Where you're looking is where we study. We just don't give you the blanket for all of HRM because they're very different areas and neighborhoods. So we want to be very specific when we're advising you, when we're breaking down numbers and making strategy. So how I work with buyers, we follow a simple system. Start out, you inquire or we meet. First thing is an intake questionnaire. It's electronic. This questionnaire is so I can build out a good profile and understanding of what you are looking for right now, what your needs are, what your must-haves are. Next, we do a buyer consult. Now we can do that in person, but these days, most things are happening over Zoom. So we just go through the whole process, basically everything I'm explaining here in this video, and walking you through that and explaining everything to you. We review recent sales that you would be interested in. So if you were like, Don, I am looking in West Bedford, this is my need. I would look up the past sales in the last, say, 6 months. I would send a list of these homes to you and I would say, rank these homes. Like, what are your top 5 best homes in here that you would definitely have been interested in? And that's just my way of reverse engineering my search and my criteria for you. So if you're like, I really loved 123 Gary Martin Drive, perfect. That's my blueprint that I'm going to use to focus in on homes that you're going to really connect with when I bring them forth and show them to you. So I know that was a lot of information so far, but buying your first home doesn't have to be complicated. So when you have the right plan and the right realtor, it's a lot easier. If you have any questions at all about this video or the process, please leave a comment. I will respond, or send me a DM. I'm happy to help at any time. Cheers. See y'all later.